Welcome one and all to Global Money Talk, brought to you by SamPro Greetings once again to all of our viewers from across the United States, Korea, and all around the world. We are coming to you live, as always, from the trading floor of the New York Stock Exchange here in New York City, the financial capital of America. I'm your host, JD Durkin. Joining me today for our market briefing and to weigh in on the top stories of the day, the great Tai Wong, independent proprietary trader. The great Tai Wong. I had to stress that word. It's great to have you here as well. Happy Tuesday morning, my friend.
Happy Tuesday. Did my mother pay you to say that? That was an amazing introduction.
Yeah,
Thank
she
you
did.
So
I don't want to mention it to you. She put $20 in the mail. Awesome to have you. No shortage of things to talk about,
Yes,
obviously,
absolutely.
especially for the markets. Talk to me about what's top of mind for you as we're seeing some slight gains across the major average indices today.
Well, you know, you were planning not to mention it, but it is an important day today historically. It is the 95th anniversary of Black Monday, the New York stock market crash in 1929. And it's hard to believe that's 95 years ago. And before we get on to it, it's National Cat Day. It's actually, I look at it every day to see what special day it is. And there are 10,000 shares. So there are a lot of Americans who are really interested in National Cat Day. And we won't even get into the childless cat ladies. But also from an actress, the it girl of my time, Winona Ryder's birthday.
That's the it girl of your time?
Well, yeah, sort of, yeah. 1990, right? She was big. You know, I remember she was going to play Mary Corleone in Godfather 3, and she got sick from filming Mermaids and dropped out, and then Francis Ford Coppola ended up using his daughter, who, is a great director now, but she got terribly panned for playing and she was untutored, I think 19 years old, a real tough time. And one of the reasons they panned Godfather 3, which honestly, given some of the movies we see today, I thought was quite decent. It wasn't like Godfather 1 or Godfather 2, but
sure,
Winona Ryder would have been maybe a significant difference had she managed to play that role.
I saw The Crucible for the first time just a couple of weeks ago. What a tremendous film.
Yes.
She was awesome in it.
Yeah.
That's a long time ago.
A long time.
Yeah, awesome.
Dating myself.
Let's talk about what is top of mind to you for these markets. I mean, and we were here for the morning show earlier today, Ty. We started down in red territory. Obviously, it's a huge day for earnings. We've heard from Pfizer before the bell. We heard from McDonald's, but we got an amazing lineup of companies, including Chipotle, Alphabet, AMD, Advanced Micro Devices. We're going to hear from after the bell. So I think right now, to me, it seems as if a lot of investors are kind of in wait-and-see mode about a lot of this information. But I wonder, I mean, we could start on the earnings front. We could start on the general trading front.
Let's take a look at earnings. I mean, I think I had Ford. I think Ford was from late after the close yesterday. They beat, but they gave lower guidance, and they were hit yesterday. I didn't get a chance to look at them today, where they are. But the theme of even if you beat and guidance isn't good, the market's punishing you. McDonald's, been watching McDonald's a lot because, well, they've had the recent unpleasantness over E. coli. We'll see if that really how much that affects them in the next quarter. But this quarter was really interesting. They beat a little bit on earnings and revenue. Same-store sales were up, though visits were down, but they got hit internationally. They opened a little lower and are now up about 1%. I think the market is seeing that their, sort of that $5 meal deal to increase traffic, has helped a bit, and then, perhaps they found the formula to say, maybe we can, get more people into the store because, listen, I know my kid will go in and buy, a 20-piece McNuggets, for $5 because she has the app, but then she'll buy a drink, right? And the margin on that drink is huge. And that's how I think that they want to will sell the McNuggets at a small margin, but the frozen Fanta blue drink that she loves, it's like $4. It's great. It's a great way to get people into the store where good things happen. Another one that I've been watching, maybe the market not as much, but D.R. Horton, the house builder. Oh boy, that is an ugly chart.
It certainly is.
They got fewer orders than the market expected, and the thing, it looks like 10%. It's up a little bit, but it opened down 15% and has rallied about 5%. But that's the worst fall in I think something like 4 years. And what this suggests to me is consumers are holding back on buying houses. probably waiting for better interest rates. And they said that one of the things that they do is the mortgage buy down. So I think they offer some financing thing where they'll buy a house from us and we'll throw in a little additional fund so you can get a slightly cheaper mortgage. They're going to continue to do that, but it suggests that the home builders may have a little longer to wait, another quarter or two, depending on what the Fed does before the market really comes back for home buying. So I was watching D.R. Horton, and I think the expectations were maybe a little too high, but that was pretty ugly open. 15%.
Yeah, it certainly was, and even if it's kind of started to pare back some of those losses, the stock's still down about 10% relative to yesterday's close, and I think that kind of speaks to general mortgage rate volatility, kind of weighing on some of those forecasts for a company like D.R. Horton. Not a company we talk a lot about, but if you're going to pinpoint a key name that can be front and center on a day like today to the general housing challenges, it's a good company to look at.
So I think, and then the rest of the market, as you mentioned, waiting for, I think Alphabet reports later today, and then the, 5 of the FANGs report this week. So that's going to really set the mood, I think. And there might be a different story for every single one. I mean, I'm hearing sort of good news out of sort of good pieces of news out of Apple. Apple Intelligence drop. I'm not an Apple user. I'm an Android user because I'm just an old guy, and I like my how I can design my screen and do all sorts of stuff. But I'm that person who I give you the blue bubble or the green bubble. I forget. But it's remarkable how Apple. It's a phone company at the end of the day.
A few other companies that I'm going to follow as well after the bell, if you don't mind. Obviously, you mentioned Alphabet. I always like covering Snap. It gives us a good sense into the state of advertisers. Okay. So especially ahead of some potential overarching macro concerns, we see to what degree are advertisers pulling back from a platform like Snap. Reddit, which went public here at the New York Stock Exchange not that long ago. We mentioned AMD. Also Chipotle. I'm a big Chipotle fan, not just the burritos. I do love the food, but obviously the stock has had an incredible run just coming off of its 50-for-1 stock split, and a company that is up 35% year to date, significantly outpacing the S&P 500, and we'll be watching closely for what Chipotle has to say after the bell today as well.
Big fan of food. I always get the double steak bowl.
My next question was, what do you get when you go to Chipotle, Tai Wong?
Yeah, double steak, and then I watch them very closely, so I make sure they give me a good scoop. It's like a bartender giving you a good pour. You're watching carefully. I like the double steak.
How about a little bit more on that? Yeah, exactly.
It works. Exactly. Sometimes they feel the heat when you're like.
Yeah, they do. And then there was that whole social media thing this year where people said if you respectfully film the person making your burrito or food at Chipotle, they'll be more inclined to put a little bit more in there.
Yeah.
It's even some of those, and they sound like silly details, but I always wonder to what degree the company may speak about things like that on the earnings call. I don't know if they really will, but it's fun to listen to regardless.
I know. No, that was my son taught me that one. He goes, Dad, you got to ask and then watch them as they do. And I'm like, okay.
Yeah, there you go. We got a lot of data this week as well, so let's turn our attention now to JOLTS as well as consumer confidence. So some really interesting stuff. Yeah, so job openings fall to the lowest level since January 2021. We saw a good bit of movement from Treasury yields as a result. A bounce back for consumer confidence. Which of those would you like to start with, and what stands out to you?
JOLTS, I think, let's start with JOLTS, because this is an indicator that Chair Powell actually made interesting, a bigger than expected drop in JOLTS for sure. But the Fed is at the point where most people, now it's 95 or 96% expect a cut in November, and it's still 75-25 where we are in December. So it has a little less impact than when the Fed was deciding whether or not on when to start. But if you look at the JOLTS sort of 5 or 10 year chart, and I didn't have time to get one in for our viewers. But we're back to the levels in the second half of the Trump, the second half of the Trump administration, where we're really around 6.5 to 7.5 million job openings. That was the average of the reports. The big ones that went up above 10, 11, 12 was really as an effect of the pandemic, and so. I think eventually we'll have to find, there'll be a level where JOLTS bases. Is it around here between, say, 6.5 and 7.5, or a little bit lower? Because for a long time, job openings in the early 2010s, we're talking about 4 or 5 million on each report. So this is still, when you look at history, you take a step back, it's still relatively elevated, and it's unclear where we are going to settle. So certainly, I think this gives the doves on the Fed plenty of ammunition to say we have room. We're well above where we think the natural rate ought to be. We're in restrictive territory. Let's do 25 and 25. So I really think just to talk about the Fed a little bit here.
Yeah, let's do it.
The view is, I think 25 in November. If they don't go in November, it makes their 50 basis point move in September look very, very good.
You think it looks a little silly?
If they didn't go. So
if they don't go next week,
go,
right? Because you look at the 50 and like, why'd you go so big to start, and now you're just going to pause.
Right. So they're going to go 25. I think the smart play is to go 25 in December. You'll still be in restrictive territory, and then you sit back and wait. Because then the new you have to watch whomever is running the new administration matters. If you get Trump in with say a red Congress, then you have to think. You're the Fed. You have to think very seriously. Should we pause here? Because if we get major tariffs, that's going to be, and we'll get to that a little bit later in the show to talk about that specifically. But that could boost inflation, sort of substantially, and you don't really want to be cutting rates in a situation like that. What about consumer confidence? The other sort of big release of the day was a big jump from last month, 108 from 99. Unclear what's driven that, whether it's inflation, whether it's the election. Although I drilled into it a little bit, and they said the election was, in terms of the write-in, people who say what's important to us. The election was fifth. It was really inflation and food prices and outlook like that. So it looks like the outlook has picked up in October versus September. But overall, if you take another step back, we're still in that sort of band where it fluctuates. It's not at 115, 120 where consumer confidence gets when the market is feeling and people are feeling really good about the economy. We're not quite there. This is a nice boost. So two sort of opposing indicators so far this morning.
Yeah, absolutely. And it's important to know consumer confidence includes both an expectations index. You're basically polling for what your expectations will be for the future, but we also want to get a gauge on how people feel about their present situation. And present situation index, both of these things now trending in a similar direction. Again, we don't have all the details as to why, but it's really interesting, right? Ahead of a big FOMC decision, which to your point, at least the CME group in Chicago, they're pricing in. Markets seem to say, hey, we are in for a 25 basis point cut. It's 96% likelihood on that. And ahead of an election, consumers are starting to say, okay, maybe a little bit more confident now than I was even a few weeks ago.
Yeah, and I think D.R. Horton wants like 200 basis points cut after that.
I'm sure. Yeah, anything that brings down that pressure on mortgage rates. And then it's interesting, too, because I don't think we saw the drop in overall headline mortgage rates after the September rate cut, the likes of which people were expecting, right? It's one thing to have the conversation on credit card debt and those interest payments begin to come down. For everyone out there who's waiting for mortgage, I mean, to me, that's the ultimate lagging indicator of what happens. I mean, you're talking about a really long time to work its way through the tract of the economy by the time you really see nice downward pressure on those mortgage rates.
And we see mortgage rates, I think we see the weekly mortgage rates tomorrow. They went down to just above 6, and then as yields have backed up substantially during the course of the month, they've really backed up back to sort of about close to 6.5. And it's a place where you're thinking, the Fed's going to cut, rates are going to come lower. Let's wait. And I think and it's also not the sort of the biggest selling season in the world. It's spring where people, buy houses, can renovate them, move in time for their kids to go to school, to a new school system in September. But nevertheless, I think there's going to be the home builders are going to have to wait a little longer.
Yeah. I would love to get your perspective on the Bloomberg Commodity Investor Conference. There's a lot of interesting takeaways, and I know among the other conversations, if I'm not mistaken, are sort of pricing in potential outcomes with regards to the election. If Donald Trump wins, then this. If Vice President Harris wins, then these other things. What has stood out to you from there, and what do you think our viewers should know?
It was a good forum last week. They invite people who've been customers of their terminals, and I used to talk to their news reporters quite a bit. And let's go to graphic 2 if we can, because I took some notes on what I thought was really the most the best presenter there, and it was a woman named Henrietta Trez of Vita Partners, and they're sort of an interesting consultant. They consult specifically on policy, and this woman, I have to say, knows the weeds about the Senate Finance Committee and different things better than anyone I've ever seen. And she, by far, the most interesting presentation, and it did say that it is open, it is on the record. So I'm happy to show these bullet points. And she goes, let's assume that Trump wins, and she goes, it will take a year to get the tax cuts that extended and the spending bill done, close to a year. But she said, importantly, you could see tariffs as soon as March 31st, 2025. So that's only 3 months after he takes office. And those could go on, and depending, we're not sure how severe they're going to be. She actually thinks they'll generate $200 billion in revenue over 4 years, which is quite substantial, but not the amount that a Trump administration would want. But March 31st comes up very quickly. The other, and why China is so concerned, and why there's I think the standing committee of the Politburo is meeting next week so they can see what happens in the election, is China exports $500 billion of stuff to us, and they import $150 billion from us. That's a big gap. That's going to be really painful for them. So the view is, if it's Trump, they're going to actually stimulate more than if it's Harris. And I guess there's no coincidence that they're meeting, these top 7 guys are meeting the week of the U.S. election. She also said that the Senate Budget Committee, and she says there's a 90% chance that it goes red due to West Virginia and Montana. They only have the appetite for a $2.5 trillion deficit, no more. So.
And that's working with a Republican president.
That's working
scenario,
with that's a Republican president and a Republican Senate.
Yeah, that's saying both sides of Pennsylvania Avenue and GOP control more of a likelihood to work together and pass higher spending. Than had you maybe have Republicans control Congress and a Democratic president, where I feel like you're not going to be able to spend as much money if you're
exactly
President
right.
Harris.
Exactly
Is that
right.
the thesis?
She said that if it's Harris and a Republican Senate, it's 2010 all over again. It's going to be just fighting and scratching, and it's going to only be a $1.5 trillion deficit.
Only.
Of course. Right? It's amazing. Where have all the fiscal
But isn't that the reality here, though? And I feel like neither campaign talks about this, neither party likes to talk about this, no matter the outcome. I think we chatted about this yesterday.
You're right.
The federal government is only putting more money on the credit card. I feel like so we're so far past the idea of we're going to balance a budget. We haven't balanced a budget in decades, right? We're never going to meet, especially if you want to lower taxes. And I understand that tariffs are a form of tax, and Henrietta there laid out some of the revenue benefits. But $200 billion compared to the multi-trillion-dollar bills that pass, it's relatively speaking a bit of a drop in the financial bucket.
You're right. You're right. And, just as a sidebar, many Americans complain about foreign aid, and we're giving away like $20 billion in foreign aid. It's a drop in the bucket. Right. Foreign aid is actually a great way to win hearts and minds and influence people. For at the end of the day, not that big of an investment. It just doesn't play well in Peoria, as they say, right? But the problem with, I guess, the fiscal hawks is they warn of doom, and doom isn't here yet. And in part, it's because we're the reserve currency. If you're anywhere in the world and you want a real return on your money, we're 60% of the world's bond market, right? There are no other places we're getting this kind of return where it's safe. So basically, we haven't had to pay for our extravagance, and until the day we do, and I don't know what that day is, and maybe I won't be alive to see it, maybe that wouldn't be such a bad thing, right? We're not going to stop. And you hear about Social Security is going to run out of money in 2031, where the fund will disappear, and we'll have to borrow money to fund Social Security. What are we going to do? We're going to borrow money to fund Social Security because the entitlements have gotten so big. Medicare, Medicaid, Social Security dwarf absolutely everything else. They dwarf the defense budget by a ton. Those things, electorally cannot be touched, and they won't be touched until someday we have to. And I hope that day is, relatively far in the future. But just to, before we move on. Another thing that she said that was really interesting is the USMCA, which Trump put in to replace NAFTA, comes up in the summer of 2026, and the Trump administration is going to extract some pain out of Mexico, probably because I don't think they really love the new president of Mexico, Sheinbaum, who's really an academic and a really, really far left progressive. Plus, it wouldn't surprise me if they took the opportunity to say, in addition, if you want us to be a little nicer to you, keep the people away from the southern border. So I think there's going to be that'll be an interesting interplay if it comes to pass in the summer of 2026. So I thought she was really, really tremendous in how she sort of laid out what it looks like, which means why I think the market has priced in a Trump victory. So if we get a Harris victory, you're going to get a huge rally in bonds because the deficit is likely to be lower, and you're going to get probably a steep correction, a steep, maybe brief correction in stocks, maybe down 5 to 10% relatively quickly before people buy the dip, and and we may actually have a very good year because the basis is so low. The other thing we should mention now is actually Bitcoin. Let's take a look at graphic number 1.
It's up 2.7% today alone, 71.8 and change. My goodness.
Yeah, we've been first time since June that we're above 70,000. So this is a 1-year chart of Bitcoin, and you can see for several months we're in a downtrend. All in that red section, all lower highs, lower lows. That didn't really look very good until we broke back out of it about a month and a half ago. And the blue section is the trend is completely flipped, and now we're above 70,000. Momentum looks pretty good. It doesn't feel frothy. Not everybody's talking about it. I wouldn't stand in this way. I think we could easily take out 73,000, maybe with a little pause ahead of that, and move higher, in the next weeks. Unless I think Harris pulls it out. I think that Harris pulls out, this thing will turn.
So that was my question. If you don't mind me popping in, to what degree do you view a Bitcoin rally being tied as part of a so-called Trump trade?
I think there's a pretty significant correlation. Trump
and is that the user base that we kind of assume may kind of skew a little right of center? I mean, I feel like we're having this national conversation of like the podcast demographic is not far off from like the meme coin demographic, not far off from the cryptocurrency demographic, and maybe they're all sort of leaning Trump's view.
So Trump has come out and said, one thing that you will get from Trump is definitely a very light touch on regulation. And one interesting thing is every single small businessman I've talked to in the last 7 or 8 years, to a person, they love Trump. It's amazing. But really, there's no small business person I've ever talked to who didn't like Trump. And I think it's because they feel that he's a businessman and there's going to be less regulation. And he said, I want to make the United States the crypto capital of the world. It's like basically sort of have at it, have fun, go nuts. And I think that's a sector of the investors who really like that. Whereas Harris, I mean, she's from California. I think she probably understands tech and its power better than President Biden, but she's probably going to be more circumspect about letting what these folks do. I don't know who she's going to appoint to the SEC or the CFTC, but it's going to be less friendly. So this is if Trump doesn't hold on, I think this rally will turn around, and relatively quickly, as we've seen Bitcoin do. And just briefly to look at Ethereum and Solana, because they're two of the big, and I don't have any charts for that, but two of the the sort of the biggest coins after Bitcoin. Ethereum's been sort of asleep, not doing anything up today, but really so far a disappointment for a lot of people. But Solana is following Bitcoin pretty closely, not yet back up at the 200s, but doing pretty well. But this is really part and parcel of the Trump trade. Although all things being equal, this is a very nice turn for Bitcoin.
Bitcoin holders certainly remember Donald Trump's speech earlier this year at the Bitcoin conference in Nashville, where, among other things, he pledged to fire SEC Chairman Gary Gensler. That's something he was just asked about yesterday. Gensler was. He says, I sleep fine at night, is what he told my old dear friend Hope King at Axios, who got to interview the SEC Chairman one-on-one. But Donald Trump also promoting a strategic Bitcoin stockpile. And now there's some Republican-led legislation to make something like that happen. I don't know what that would do in terms of the value for Bitcoin holders, but it's at least something that I think communicates support for cryptocurrencies from one of the two major candidates.
I'll tell you what, a Bitcoin stockpile, and I'm always very wary when the government messes around with stuff like that, when they mess around with the Strategic Petroleum Reserve, for sort of semi-electoral purposes. I don't think it was intended for that, but a Bitcoin stockpile would certainly goose different coins and or Bitcoin and other coins as well, quite quite nicely. At some point, there's going to be buy the rumor and sell the fact. But if somebody's sucking up a supply of Bitcoin whose supply is essentially limited, that's going to make a pretty big difference. And Gary Gensler, I mean, I worked on Wall Street banks for a better part of 30 years. Gary Gensler is sort of the boogeyman. He's Baba Yaga. He was when he was head of the CFTC, he really put the heat on the bankers. He's less powerful than the SEC, where the SEC is really more civil, lawsuit minded and penalty minded. But yeah, you'll be somebody much more friendly than Gary Gensler. I don't think Trump will let Gary Gensler, within 300 miles of the Capitol. I think a lot of markets will like that.
I interviewed Bradley Tusk, who's a longtime political advisor. He was called Uber's political genius for many years, and Tusk's view was that Gary Gensler has politically looked to align himself with people like Elizabeth Warren, but in doing so, the frustration from the community was that this SEC under Gary Gensler was utterly unable or unwilling to even clearly define what's a security, what's a commodity. Can you give us the rules of the road? Don't punish us for breaking the rules that you're not telling us that we need to abide by. And I think that's a big part of the frustration, specifically with him at the SEC.
That's right. That's right. But in any case, the Trump administration would see the back of him. But he's a lot less powerful at the SEC than he was at the CFTC, where he did a lot of put a lot of heat on Wall Street.
Finally, we got a couple minutes left here. Taiwan here to buy 1,000 attack drones from the U.S., looking to finalize that purchase from U.S. defense contractor AeroVironment and defense technology company Anduril Industries. What jumps out to you about an interesting story like this, especially for Taiwan?
So there's a lot of heat in in the Taiwan Strait at the moment. Whether it will dial down, with a new administration is unclear. Trump, interestingly, is a saber rattler, but he
heard that before.
At his core, he doesn't like to fight. He doesn't like war. He's an isolationist, a proto-isolationist. So, but what's interesting about this, and I was reading the article, was these are small drones, 4 pounds to 25 pounds of munitions, and great against tanks, great against sort of landing craft. And the Chinese will moan and groan about it. But what it shows us is in the recent conflicts, certainly Ukraine, Russia, and previous to that in the Azeri-Armenian conflict, that drones are cheap and they can do a lot of damage. That turned the entire Azerbaijan-Armenia conflict was on because the Azeris were so good with drones. The Armenians had to essentially sue for peace with Russia behind them. And it caught my eye is this is the future of warfare, and I'm glad that I think we're getting the idea that it might be easy to stop $10 million missiles, but really hard to stop 100 or 1,000 cheap drones. So this is a smart move by Taiwan while they can, ahead of you don't know what Trump brings.
Yeah, absolutely. It's a fascinating conversation, and I love doing these with you because we get to have a little bit of fun in the process, but really learn a lot and engage in conversations that involve markets and politics and everything in between. And we got no shortage of things to get ready for tomorrow, too. We're going to have a fresh batch of earnings after the bell tomorrow. You and I get to sift through tomorrow. That's the great Tai Wong. Thanks a lot, as always. Good to have you here today. I slept that in there again for you. Folks, coming up here on the show, the great Dan Ives joins the great Dan Ha for our market insight. Don't go anywhere. We will be right back after this.